What's up guys, welcome back to the channel. And usually I'm not one to create doom and gloom videos, but based on what the stock market is doing right now, what the economy is doing, it's really concerning, especially when you see headlines like US stock futures edge lower, and that seems to be a huge understatement. Now if you look back this past week, the S&P 500 on Wednesday fell 160 points, down 4%. On that same day, the Dow Jones erased 4%, a 1,200 point drop, lowest since June 2020. Nasdaq futures tumbled 550 points, plunging over 4.7%. And I'm actually here to tell you guys that this is going to be getting a lot worse. In fact, on Wednesday night, I was up watching the news and I saw that Target lost a quarter of its market value. And get this, the company reported an operating margin far below analyst estimates, citing higher transportation costs due to rising fuel prices. So that was a 27% loss just like that for Target. Now looking back at the past week, Wednesday was also the 7th worst day in history for the Dow, and so we officially made it to the top 10 of worst daily sell-off. Now while this is all happening, the reports are that Powell will not hesitate to tame inflation, insists that the Fed will continue to raise rates until inflation comes down, and this is based on these 25 basis points and these 50 basis points rate hikes that they have planned, and we're going to see a few more of these this year. And this is why I think that everything is definitely going to get a lot worse, and the stock market is definitely going to go down even further. Now, even though these numbers are from earlier on this week, it still really doesn't matter because the Dow is down 1,000 points and then the next day it's up. The reports are always that the Dow rallies by 100 or 200 points. It really doesn't matter because the next day the Dow is down another 1,000 points. Now, if we look week to week, we're down. If you look month to month, we're down. If you go back as far as the 12-month chart, we are down as well. Now, there are also some interesting reports that I came across this week. For example, Walmart was down 7% on Wednesday. Target was down 27%. I mentioned that earlier on. Amazon year to date is down 35%. I actually have Amazon shares, and this is how I know that this is serious, and this is actually going to get a lot worse because Amazon is one of those companies that you would expect to be doing well right now because retail stores are closing, they're going out of business, people are shopping online. So you would assume that if any company were to do very well right now, that would be Amazon, or it would be among one of those companies that would be doing the best right now. But yet year to date, it's down 35%. And this is why I have paused investing in the stock market, because I see this going even lower and I can see things getting worse as the year progresses. Now, if you look at Cisco, for example, one of the biggest manufacturers of computer networking equipment, they're down almost 17% on Wednesday. Now, this was an interesting one because reports were that Cisco systems were down 4% in the regular session on Wednesday. Then after hours, as of 6 p.m., they dropped another 12.5%. And this is because investors reacted negatively to the company's results for the fiscal quarter, which ended April 30. Now, how do I know that this is going to get worse, right? Because I don't have a crystal ball. But there are a couple things that tells me, or a couple signs that tells me that this is going to get really worse. Now, first of all, this false sense of being wealthy is done. It's over. A lot of people think they're rich and they're wealthy because, one, they have a lot of equity in their homes. Their 401k balance has been going up. The stock brokerage balance has been going up. And watching the news, I saw that consumers are hard pressed right now. So the question is, what is going to happen when money is tight, earnings aren't going up, rent is already more expensive, mortgages are unaffordable, the lease renewal is also unaffordable, the equity in the home is going away, or it may go away, the stock and the 401k balance is going down. What are people actually going to be doing? And this is why a lot of people are going to be feeling the true economy very soon. Now, something else interesting is that earlier on this year, we kept hearing that the economy was doing very well. We were bouncing back. We were told that unemployment was at an all-time low, but based on the news reports this week, that is absolutely not the case. Again, reports like this. For example, Netflix lays off 150 employees. The streaming service is experiencing a drop, right? A drought, actually. People are canceling subscriptions. And this is funny because this is something that I used to talk about on this channel a lot before. I used to always talk about the fact that people have a bunch of subscriptions that they don't remember about and that they're not actually using. And instead of paying for these things, they should cancel these subscriptions so they could save more money and then use that money to invest. However, people are now doing that, but instead of them actually cutting back on these subscriptions so they can save money or to budget, they're cutting back because they simply cannot afford these subscriptions like Netflix anymore. Now, as for the record-breaking low unemployment that we've been hearing about, that is actually false. That information is not true because Walmart and Amazon, two of the largest employers in the US, just came out and they said that they aren't seeing a labor shortage. Instead, they've had too many workers and now it's taking a financial toll on them. So the reports are that throughout the past several months, businesses across the US shared a common problem, and this common problem was not having enough employees. And this is what we've been told time and time again because there are job signs literally everywhere. But in the first few months of 2022, two of the nation's largest retailers experienced a new staffing problem, one that impacted their quarterly financials. Walmart CEO said that the company experienced weeks of overstaffing, primarily due to the pandemic. So basically what they're saying here is that Walmart and some of these other companies that employ thousands and hundreds and thousands of people, they're saying that they're overemployed or they're overstaffed, and this was because most people went out on COVID, and then when the COVID cases went down, then these people came back to work sooner than expected, and also some people that weren't expected to return to the workforce, they also came back. So now they have the problem of overstaffing. And by the way, guys, the signs everywhere for jobs, these are low-paying jobs. People are not going to get jobs at, let's say, McDonald's and then be able to afford a $2,500 rent payment even with a roommate. So what this really tells me, or what this means, is that these companies are going to be cutting employees. A lot of people who recently got hired are going to be losing their jobs very soon. So this economy is not as strong as you may think. Stocks are going to be going down more, and the housing market maybe right after, because people who got mortgages or are getting these mortgages right now may be qualified right now, but if they lose their jobs, then they can't afford to make the mortgage payments. So we may be seeing some issues in the housing market right after the stock market bottoms out. Now, if we look at some of the numbers again, watching the reports this week, week to week, mortgage demand is down over 12%. That's a lot. Consumers cannot afford interest rates over 5%. Nobody's going to be taking out these ridiculous mortgages. Also, refinance applications are down 10% week to week, and the ARM is coming back. The adjustable rate mortgage is coming back. And think about this, right? What if you were to purchase some property right now because you needed somewhere to live and you took out one of these adjustable rate loans because you thought that, you know what, you'll just take the loan right now, you'll get in the house, and then you'll worry about it later. Well, if you use your job and the 401k balance is going down and you have no income, you don't have any savings, you have rising interest on your mortgage, then this is actually going to be financial suicide, and it's going to be a disaster for a lot of people. So it's actually not the time to play the blame game right now. I mean, you could blame the Fed. There are many different factors or many different people that you could put the blame on what's going on in the economy right now, but right now you guys actually need a plan. And I don't have a crystal ball, but I don't think that this is going to be a week-long event or a month-long event. I think this is going to be several months to years. We may go into a deep recession, and now's the time for you guys to start paying down debt. Credit card debt, which is at an all-time high right now. I'm going to talk about that as well. But credit card debt, get rid of it. Start padding your emergency fund. A lot of people have a 3-month emergency fund. If that is you, you may want to start padding that up, getting it to a 6-month emergency fund, and possibly even getting a 1-year emergency fund because there's a lot of uncertainty ahead. Also, if you're not a skilled worker, you want to definitely have a good emergency fund. You may want to start getting extra hours, start working more. If you can get unlimited overtime, then you should be working those overtime sessions, get a side hustle, but you need to get your income up right now because you need to start saving a lot of money because, again, there's a lot of uncertainty coming. And the only thing that I think we can be certain of at this point is that the economy is going down even further. So 401k balance are going to be going down more. Stock brokerage accounts are going to be going down more. People are going to be losing their jobs. Sad to say it, we're already seeing fuel prices skyrocketing, especially diesel. And the price of fuel is causing a lot of truckers to exit the business. I was actually looking on Facebook Marketplace and I saw people making posts saying that, they've been in trucking for a while, but they're looking at other means of earning right now because it is so expensive. Diesel is so expensive, so they don't think they can actually continue in the trucking business right now. Now, if you think about it, to get fuel to the fuel stations, the trucks that take that fuel there, they run off diesel. All the trucks that transport goods to Walmart, Target, all these major stores that you shop at, they run off diesel as well. Cisco, probably the largest distributor of food for restaurants around the US, all those trucks run off diesel, so the price of diesel is going up, and we're going to be feeling the pain because that increase is going to be reflected in just about every single thing that you and I need to survive on. Again, I'm not one for doom and gloom videos, but I just needed to make this video today to give you guys my perspective. I think that the market is going down. It's going to be going down a lot further. I've actually paused investing in the stock market for a while because I'm saving money on the sidelines, and I think the market is going down. It's going to go down by a lot more, and there are going to be opportunities, a lot of opportunities coming up. But right now, I think you should be saving as much money and also earning as much money as you possibly can. So guys, go ahead and comment down below. Let me know your thoughts as well. If you ever want to talk to me one-on-one, you can message me on Instagram. That link is down below in the description. But pad those emergency funds, work as much as you can, stay clear of any debt that you can avoid because this is going to get really painful, even if you're well off and you're still going to be feeling this. Take care.